Hello, everybody. It is Saturday, March 9th. We're going to do our weekly COT deep dive here. Just a quick reminder that derivatives trading is inherently risky and past performance is not indicative of future gains. Now, with that being said, we'll start off with the SPX. Um, Not much has changed over the last week, although we did see the continuation of the push higher for distribution by commercials, as we laid out in last weekend's videos. We know that was a distribution move, as we see the position was cut by about 10%. So last week we had the breakout to new highs, and it was bullish on that prior Friday, and that led to the upside this week. Now we had all-time highs, several catalysts with ADP and non-farm payrolls to sell into. This coming week, we have CPI and OPEX are the two big ones to watch out for. You can look back at last summer when we did the same thing. Commercials had built their longest position here, and then they'd been distributing the whole way up. And then as we started seeing a consistent decline in their position, that's when we saw the rest of the markdown and distribution. So we've had the continued push higher now, and this Friday, the move was on increasing volatility, increasing volume, and decreasing price. So you should know what to do with that and how to prepare for the week ahead. On the Dow, we laid out that last week the commercials were near a 3-year max short position, and we were looking for downside. Monday and Tuesday did bring that downside, and then you can see as they covered into that weakness. So that was to the tune of a 700-point move right here. So we put the video out on the weekend, told you some levels to watch out for, including 38,879. And you had either a 400-point move or 700 points, depending on if you took either of those trades. And again, that 879 you could have taken almost every day this week for a short. Commercials are still short as we head into the week ahead, although they've cut some of their position and the major edge is gone. And so I will post charts and analysis for subscribers throughout the week to keep up on this. But the easy money on this trade, as several others will review that we've been going over each week, have kind of faded a little bit. So Bitcoin is the next one. Commercials built their longest position into the middle to end of February, in that third week of February. And we can see, in terms of their score and their duration, they're not giving any outlier signals at this point on any of the participants, whether commercial, non-commercial, or small speculator. And we had laid out that this would be a liquidation move given the headlines and the move to all-time highs. So if you didn't catch YM, I hope some of you caught this. We've been talking about this one for a few weeks. You could have traded this through crypto, equities, futures, options market. There's a whole lot of ways to capitalize on this, on Bitcoin. But again, the easy money's gone. So we laid out what it would have been, and we've now gotten that move to new all-time highs, and then the pullback. But the distribution was right here in the easy markup. Same thing we saw into the ETF decision. These things, if you follow the money and you follow the flows that are coming in, you can understand what the agenda is going to be and how they will carry that out, and you can position yourself for those. But again, there's not always an edge in the market, so we're trying to lay these out for you in advance. And I hope some of you are able to capture and capitalize on this. This past week, the reason we had the all-time high in the print on Tuesday was to paint the tape. I went over this with several students. If you don't know why, you can check out our room or come interact with us a little more. But we knew this was likely to happen, and Tuesday was the highest odds day for that as well. The yen, we've been going over for the last, again, 3 to 4 weeks on this, that commercials have been building a long position, and we were nearing extreme levels, and we should be seeing a bounce. We gave out the levels to watch on that. You can see this week they cut their position. So now the easy money on this is gone. There should be a bigger run up on the 6J, but the easiest entry and setup has passed. So we've been laying this out for a while that this was the position they were going to build. We gave the level right here. It's 67110, and then it's 67585, 68, and 682. and these have been in each of our videos every week. I hope some people caught this. This was about $2,000 to $2,500 per contract, depending on where you got in for this move. Again, when we talk about these CoT data and these positions, they take time to build, weeks and months. They take time to unwind. However, in the initial transition, you can capture the biggest move because you're getting the move right when it starts. Now it takes a little more detailed analysis for positioning yourself. So I hope on some of these, between the Dow, Bitcoin, oil, the yen, I hope that some of you are capturing some profits on this. But the easy money on the ones we've been reviewing is kind of over. So now we'll look at two new setups that are starting to develop, and we'll monitor these closely over the next few weeks. On the commodity side, we did get oil pushing to 80 as we've been discussing again, but now our focus is going to go to gold. And so we should see the same recurring pattern here where commercials are shorting into this move as non-commercials are buying. And we can see that we're getting near these extreme levels. Now, there's still room to run. We're only at a score of 18. We could go down to 0. We're only at a score of 90. We could push up to 100 and set new levels. So small speculators are at a 0, and that is an outlier. Although they're the smallest participant, we're not going to focus quite as much on them. But we should see the same setup that's played out here and played out here, playing out again. And this is where they happened on the chart. So March to April, when commercials got very short, that was the top in the market, and we dropped pretty substantially, about 10% or more over the coming months. Again, these take time. Then into November, on the spike on CPI, they pushed the market down, which stayed sideways, and we went about 150 points from when they built their max short position. Now they're building that position here. So there's still room to go up. We're not going to try to call the top on this. We will have our levels posted in the room for you to monitor as we go ahead. But this is the same setup we're going to look at. It is a big push, a markup, and a markup. And then we're going to look for those signs of the distribution happening, and then we'll see it in the CoT report. And then we know that the commercial side will win this game in the long end. Our other rising setup is on the 6S, the Swiss franc, as comms are nearing a 3-year max position. So we are at a max position now in terms of score for the last 52 weeks, and we are getting close to a 3-year position. And we are getting big outliers on the non-commercial side as well. And so, again, to reinforce the point, we need to follow the money and understand then how that creates the agenda. All that is occurring day after day is we're taking money from one instrument and putting it into another, kind of like pouring water between two glasses. We want to identify when we have an edge for the cup to get filled and be ready for that rising tide. Or if we're on the short side, we want to enjoy that water slide out of one and then into the other. And so on the Swiss franc, when we've had these max positions over the last couple years, we can see a markup happening into a bigger move. And this is now where we have that max position. So I will post levels in this week in the room for the subscribers on the 6S and gold. And I hope that some of you are able to capture these gains here. Just remember that our job as a trader is to deploy risk and capital when it's appropriate. So if you're stuck on one instrument, you can broaden your horizons. And if you want to upgrade your trading, check us out at Sticks Trading Academy for our classes and Discord room. Have a great week and stay safe out there.